Okay, everybody, here we go. It is me, Gregory Mannarino, and we again have to talk because it's getting really stupid yet again. Wednesday, October 14th, 2020. Let's start off with this. This whole deflation argument is just asinine. We just found out that the producer price index, well, let's put it this way, economists polled missed the mark by 100%. They expected producer prices to rise 0.2%, but they rose 0.4%. Everything's inflating. Stock market, along with the Federal Reserve's balance sheet, the price of goods across the board. I mean, of course, the dollar is deflating. But that's it. I mean, that's what we're witnessing here. A dollar in a death spiral, by design. You all know that. And because of that, everything else is going to inflate. And the reason why we're not seeing massive inflation at this particular time is because there's no money velocity. Again, when you hear any politician try to explain to you that our economy is strong, our economy is booming, or in some kind of a recovery, super V and or otherwise, you know you're being lied to. One metric is all you need to look at. The money velocity. I've talked about this a billion times. The rate at which cash is moving through our economy. We are near historic lows with regard to the rate at which cash is moving through the economy. Global economy, as a matter of fact. Now, you cannot have an economic recovery, an economic boom, or anything that resembles that without money velocity moving higher. In other words, cash moving through the economy at a faster rate. So it's just too simple to see. You understand? Now, with that aside, what else is going on here? Stocks are pointing towards a slightly higher open as I am doing this video blog. Gold and silver are higher, dollar is lower. You got crude oil catching a bid slightly. Cryptocurrencies are flat to slightly lower, but the 10-year yield is 0.71. A few days ago, we were at 0.79. What does that mean? A lot of cash making its way into the debt market. This is a fear trade, okay? The market may be smelling something here, and I've been explaining to you over the past few days that this market needs to give back. It's stupid. It's frankly stupid where the stock market is right now. But again, when you have an environment like this, middle class is dying, an economic meltdown, an economic depression, okay, here in the United States, around the world. But you got corporations stronger than they've ever been. You got Wall Street expecting their biggest bonuses on record. Well, this is what you would see. Again, market keeps inflating. Everything else, I mean, people are suffering here. I think you get that. But again, our do nothing loser Congress can't get anything done. But again, all this is a mechanism to borrow cash into existence, and this will not be the last stimulus package. Look, I don't know another way to put this. You should know this already here. The fact of the matter is, we've never seen this before where we're in right now. And we have a Federal Reserve that continues to pour debt into this market like we've never seen before. They're buying all the debt, as a matter of fact, issuing more dollars on an epic scale. And this is a mechanism of all the central banks. They're doing the same things at the same time as our global economy is in free fall. So you understand, there's obviously something bigger going on here. This is a massive wealth transfer that is occurring, just like I said would happen for over a decade. We're in the middle of it now, but the grand finale is going to be the market meltdown, which is coming at a point of their choosing, and it's going to be extremely rapid. But for now, as long as the Fed's balance sheet continues to inflate, Nothing else matters. Nothing else matters at all for the market. Like I said yesterday, I hope you get this. If they were to tax the American people at a 90% rate, everyone, the stock market would still go higher. If they were to split the earth in quarters right now, the stock market would still go higher as long as the Federal Reserve is pouring easy money into this market, as long as the Federal Reserve is buying everything. But we haven't seen anything yet. Believe me, with regard to debt acquisition, and I keep talking about this, you haven't seen anything yet. This is about to get monumentally worse. Monumentally worse. Debts and deficits are exploding, but you haven't seen anything yet. These are about to get monumentally worse. We're quickly approaching a moment in time that is literally going to rock the core of the earth, and I've been saying that forever too. If you think this COVID scam is a big deal, if you think that this COVID induced, well, actually it's not. It's a central bank induced scam on the world to shut down the economy, kill the money velocity to allow them to finish their final solution to be the lender and buyer of last resort so they can own the world. So with regard to that, nothing. You haven't seen anything yet at all whatsoever. So count on that. Count on that happening. All right, look. For you lions out here, real quick, I want to run something by you. When I post a trade, and I've been saying this a lot, I just want to drill this into your brains, okay? I post all my trades in my free newsletter. There is a link in the description of this video. Once you have a profit in a trade, pull it. Okay, I don't like the environment we are in right now. Market is way overvalued. It's due for a pullback. Are we going to get one? I have no idea. But if you look at the 10-year yield, it doesn't, it's still in a good spot. 0.71, it's still fine, but we dropped significantly lately. Keep your eye on that. You know that. And keep your eye on crude oil. If they manage to prop up crude, it'll boost the energy sector. It'll boost the financial sector. Stocks will rise. You understand? More bank earnings are coming in, better than expected. Look, Wall Street always wins, and the middle class always loses. All right, I'm out of here. Please share the video. It's important. I will see you later. We're going to have fun, and I'm out of here.